Hello, my name is Peter Stradham. Thank you for taking the time to watch this video. The purpose of this tutorial is by using an example, just to illustrate to you the functionality of the tool and how you could use it under your own circumstances. For the purposes of the example, I've chosen our old friend Joe Soap, and what we're going to now do is go through the data capture cells just so that you can get an idea of what to input and where you need to input it. Now in Joe's case, he's got a few life policies and he's got some group life cover. He's got Sanlam, Old Mutual and Liberty. On the right we've got the values of these various policies which would then pay out upon his death. We also can take into account any assets that could be sold upon his death. And in this particular instance, he's got a second car which could be sold. And there's a caravan which probably would then become superfluous, and he thinks, well, perhaps he could realize 150,000 rand if he was to die today. Also got a piece of land worth 300,000 rand, and that could also be sold. So this then all goes into the collective pot. You could also input value of investments, share portfolios, unit trusts, any other assets which could be turned into cash and be available as capital for the surviving spouse and the children to pay off the debts and also provide an income. In terms of debts, under liabilities to be settled, this is where we would highlight the debts that need to be paid. This example is a bond on the home of 750,000 rand. Sundry debts and tax, credit card, it could be Edgar's account, it could be outstanding income tax, any number of things. Any amounts that need to be paid out in order for the family to be able to live debt-free. Then we need to look at the actual income that Joe would like for his family to be able to enjoy should he pass away. And Joe has decided on a figure of 20,000 rand a month, which would be appropriate for their needs, given the fact that the house would be paid for, they wouldn't owe any money, so in essence that's spending money in this particular set of circumstances. Would want that to escalate at 7% per annum should he pass away, and he would like that to be able to endure for 30 years. In other words, 20,000 rand a month, payable for 30 years and increasing every year at 7% per annum. That really is as simple as it gets in terms of data capture. Once you've done your data capture, you then click on the submit button, and the calculator will then work out the status quo in terms of what your position would be should you pass away, and then it produces a report, and the screen would come back up again after the calculation's been done, and you could then scroll down and there's the report. It gives the objectives of the exercise. It also stresses that you should, in fact, if you need advice, rather than try and take it upon yourself, consult with a suitably qualified and registered financial advisor. And we also mention the importance of having a will in place, a current will. So often people pass away, they haven't paid attention to their will, perhaps it's a bit outdated, and it really doesn't do the job that they were hoping it would do, and it causes a lot of hardship for those that are left behind. Summarizes the financial situation upon death, so the total proceeds of all the life policies and group life cover, plus the assets that could be sold, the caravan and the car and the land, less the liabilities, the bond and sundry debts, and the net amount of capital left over is 1.75 million rand in this case. Now, in order to provide an income of 20,000 rand a month to the wife and children, and in order to enjoy an annual escalation of 7% per annum, and assuming that that income would endure for 30 years, a total amount of 4.9 million rand would be required to be investable to provide that income. So that's the summary of the situation. Capital required, 4.9 million. There's capital available, so there's a shortfall of 3.2 million rand. And the report goes on to suggest that perhaps you could look at implementing a life policy. This is probably the cheapest and most efficient way of taking care of the shortfall. Having said that, the report, albeit accurate and reasonably comprehensive, should in no way be construed or considered as being the rendering of financial advice. If you choose to implement any strategies once you've done your own, then should you find that it's inappropriate, that then becomes a bit of a risk that you take. I would strongly suggest that you do consult with a suitably qualified and registered financial advisor. If you don't have one, you're more than welcome to contact us. In order for you to be able to print out your report, you would scroll back up here, click on the print button here, as I'm doing, and your report would then come up. You click OK, and there's your report, and then you can save it or print it out and file it. Thank you for watching this video. I hope that you found it to be useful. I hope you take us up on our offer of using the tool in your own particular circumstances.